If you really look through it and look at the ramifications down the road, it's dollar bearish because it's adding more and more debt to the balance sheet. And it's certainly gold and silver, hard money, real money bullish, because anything that's going to undercut the dollar is going to be bullish for gold and silver. Gold and silver don't go up or down. They don't change. What changes the value of the currencies that they're being measured in.
Bill, so first question out of the gate, do you ever see a time to sell silver for some other asset class, or do you ever see yourself trading it, possibly some of it, for real estate or another hard asset?
The answer is yes, but that is quite a ways down the road. You need the debt bubble to completely pop. It needs to burst. There needs to be bankruptcies everywhere you look, blood in the streets, and assets across the board are going to drop in value versus gold and silver. In other words, it'll take less gold ounces or less silver ounces to do the trade. So yeah, I could see it happening 2, 3, 5 years out, where everything is collapsed. You've got silver, the masses don't have silver or gold, and yeah, you'd be able to use that to acquire assets on the extreme cheap.
I was always curious how many people currently in America estimated have actual physical precious metals, and I believe the number is a staggering like 0.9%. Does that sound about right to you?
Yeah, it's under 1% for sure. What that somewhat means, when everything does go south, if you own silver and gold, and I mean, you don't even have to have huge quantities, but you'll more or less be considered a bank, because there won't be any money on the streets. Money's going to get gobbled up, destroyed, whatever you want to call it, with a debt deflation. Debt is going to wipe out equity across the board.
Yeah, absolutely. Which is why we've encouraged our audience for years, Bill, in conjunction with your help, to become your own central bank. And obviously, precious metals is one great similar way to achieve that. The next question I have is, it's kind of a protracted question, so bear with me for a minute. There are several theories as to why Fed Chair Powell has been slow on cutting interest rates. One possibility is the 10-year Treasury has remained strong and the Fed generally follows the bond market. Some think that Powell has aligned himself with U.S. banks in order to kill the European banking system by purposely keeping our rates high for an extended period of time. Powell, as you know, is a Volcker advocate, doesn't want to cut the rates until he absolutely has to, which ensures he doesn't make the same mistake that previous Fed chairs have done by cutting rates too quickly and deeply. Or fourth, and I think most likely, is Powell wants to try to deny President Trump the rate cuts. He wants as a tactic because doing so may lay the blame squarely on the Fed when the economy tanks. What do you think is the ultimate reason for the delays?
It could be any that you mentioned. I mean, probably the most obvious one is the political aspect of it. Yeah, you're right. I don't think he wants to give Trump the rate cuts. The problem is the math. The math is the problem. I mean, you just look at, we're spending well over $1 trillion a year now just in interest alone. And I saw a debt clock from 1990 where the total debt outstanding was $3 trillion. So in 35 years, we've gone from 3 trillion to 37 trillion, and now the interest is over $1 trillion. It's going to be probably $1.5 trillion this year, and maybe higher the following year. I mean, it's very possible that market rates, and we've already seen this, the Fed has cut rates 1 full percentage point last year, and interest rates on market prices of bonds rose 1 percentage point. So, I mean, that illustrates right there. It looks like the Fed is losing control of the yield curve, and that's a huge problem. I mean, they're at this point, they're damned if they do, damned if they don't. I mean, if they cut rates, then you're going to see the dollar tank, and you very well may see higher interest rates. You may see treasury bonds sell off more and rates go higher. And if they don't cut rates, I mean, the markets are becoming more and more illiquid. If they don't cut rates, you may see a deflationary black smoking hole in balance sheets across the world with the central banks that hold dollars. So it's like I said, they're damned if they do and they're damned if they don't. And at this point, because the math is so vast, I don't think it matters what the Fed does. Disaster is going to occur either way.
Yeah, I think you're right. I think President Trump has ostensibly boxed them into a corner where they, no matter what decision they make, it's going to undo the old system. And as you have said rightly many times, Bill, in many past conversations we've had, for us to bring the debt out of the picture, we'd have to revalue gold and silver into the six-figure range, and that wouldn't happen because that would put it out of reach for most people. So we just have to default and reset. It's pretty clear at this point. It's becoming more so as we go along. Which brings me to my next question, Bill. I'm really curious. We've talked about this before, but we know that President Trump is going to force out Powell as part of the narrative, and they're going to bring in a new Fed/Treasury chair. Seems pretty good opportunity, or certainly a good possibility that Judy Shelton will get the nod. Do you think that's a good possibility as well?
Yeah, I think she's a possibility. I also think Scott Bessent, the current Treasury Secretary. But yeah, I'd like to see Judy Shelton in there. I, I'm really not sure why she would want to take the job because where she's going is not fixable.
Well, the reason I don't know. I mean, that's a good question, but I would like her to be as well because I think she'll bring back the gold standard. He brought her in his first term to kind of do a litmus test in a swampy environment politically. He likes to hire women as executives. He's had a track record with that before. But that's a good question. What would be her motivation? I don't know. That's certainly. So the other question becomes: if he does pick Bessent, would Bessent be likely to return to a gold standard in as much as Judy Shelton would?
Yeah, I've listened to him uh, speak over the years, and yeah, he understands gold. He understands hard money. He understands there's a huge problem. I don't believe that it is fixable. Said, six-figure gold. That's not necessarily a fix for our system. Uh, Gold being brought on to central bank balance sheets. The reason they're doing that is to hedge against a collapsing dollar. Uh, Six-figure gold would ultimately uh, or could ultimately fix the system, but the destruction of wealth, the destruction of lifestyles, the destruction of living standard, I think you would, I can't imagine how the public would react to that. I mean, I've said all along that I think that where they're bringing us is towards a disaster, and they ultimately want to bring the central bank digital currency. And the best way to do that is to tank the system and get the population to beg for it.
Well, I mean, the good news is, to your point, Bill, is whether he picks Shelton or Bessent, we're going back to a gold standard to undo it. And as you've always said, gold is going to be the last man standing, silver, of course, as well. So as long as you're holding that, whatever they do, you have a way to wedge around it. But it is clear, to your point, that there's going to be a big disparity between the rich and the poor, and you're either going to be on the right side of history or the wrong side. And we're just trying to get, as you know, people to the right side of shores as quick as possible. And I'm glad you brought up the dollar, the failing dollar, because that was my next question. Our position, Bill, is that the dollar index, I looked at this morning, it was 96.47, so it's been precipitously dropping. It's going down, and falling interest rates could be a tailwind for gold and silver prices. We also see the passage of the big, beautiful bill as a tailwind with the trillions added to the deficit. What are your thoughts on all of that?
Let me comment on the big, beautiful bill. It's going to add what? Uh, 5 trillion, 10 trillion to the deficit. I mean, it's not a fiscal reform in any way, shape, or form. What if you look at it, that is, if you really look through it and look at the ramifications down the road, it's dollar bearish because it's adding more and more debt to the balance sheet, and it's certainly gold and silver, uh, hard money, real money bullish because anything that's going to undercut the dollar is going to be bullish for gold and silver. Gold and silver don't go up or down, they don't change. What changes is the value of the currencies that they're being measured in. And truth be told, um, in a correct world, everything would be valued in grams of gold or ounces of gold or whatever. That's the way things should be weighted. And your mind would be blown if you looked at charts based in or measured in terms of gold. If you looked at real estate, if you looked at the Dow Jones S&P 500, if you look at literally anything in priced in gold since the year 2000, it's literally been very poor performance because gold has gone higher, which means gold gold hasn't changed. What's happened is the dollar has gone lower and lower and lower. And if you look at any countries that have blown their currency up, where their currency got completely thrown out the window and had little to no value left, their stock markets within a month or 2 months after collapsing, they start going straight up. And what happens generally is the stock markets end up with about half the purchasing power of what they had, but they're at all-time highs in those currencies. Now, if you looked at those stock markets, and like I mentioned with the chart, stock markets in gold terms, they go down. But the point I'm trying to make is the destruction of uh, the currency masks the destruction of purchasing power on stocks, real estate, certainly bonds.